Welcome everyone. Today we are going to learn about the sales and revenue budget. This type of budget is one of the most important parts of financial planning because it shows the total revenue a business expects to earn from sales. It is often the starting point for other budgets, as it predicts how much money will come in and helps guide all other planning in the workplace. What is a sales and revenue budget? A sales and revenue budget forecasts the money a business expects to make from selling its goods or services. In manufacturing, this means the income from selling finished products. In services, it may be called a fees budget or professional services budget, but the purpose is the same. The budget can be prepared in different ways, such as by product, by time period, by region, or a combination of these. It also shows how many units the business expects to sell and at what price per unit. Example, High-Low Ltd. Let's look at an example from High-Low Ltd., a company that sells gourmet fish packs to the Asian export market. High-Low prepares its sales budget every quarter. In the first quarter, they expect to sell 3,000 units, then 3,500 units in the second, 4,000 in the third, and 4,500 in the fourth quarter. With an average selling price of $60 per unit for the first 3 quarters and $62 in the last quarter, the total sales revenue for the year is expected to be $909,000. Understanding the sales budget figures. To understand the sales budget, we look at 3 key items. First is the expected unit sales, which shows how many products the company expects to sell each quarter. This number is based on past sales and predictions about future changes. Second is the average unit selling price, which can be fixed by contracts or vary depending on the season. Finally, total sales are calculated by multiplying the number of units by the selling price. How High-Low forecasts unit sales. High-Low's budget begins with the average sales of the previous year, which were 3,000 units per quarter. They predicted the same number for quarter 1. From quarter 2 onwards, they expected sales to increase by 500 units each quarter because of a government-funded advertising campaign in Asia. That meant 3,500 units in quarter 2, 4,000 in quarter 3, and 4,500 in quarter 4. Determining the unit selling price. The unit selling price was set through a forward-selling contract with overseas buyers. This contract fixed the price at $60 per pack for the first 3 quarters. For the fourth quarter, High-Low was out of contract and expected seasonal demand to push the price up to $62. These price details are very important because they have a big impact on the total revenue forecast. The sales budget, the master key. The sales budget is known as the master key because it influences all other budgets in the organization. The production budget, for example, depends directly on how many units are expected to sell. The direct labor and materials budget also changes based on production levels. The capital budget may include investment in new equipment if production needs to rise. Selling and administrative expenses depend on sales targets, and the cash flow budget is guided by how much sales revenue is expected to come in. Impact on key budgets. Looking at the impacts more closely, the sales budget drives the production budget so that businesses don't overproduce or underproduce. It affects labor and materials because more sales mean more workers and raw materials are needed. It influences the capital budget because production growth might require new machinery. It also affects marketing and administrative budgets since higher sales targets may require more spending on promotion and support staff. Finally, it directly shapes the cash flow budget, which predicts the money moving in and out of the business. Risks of inaccurate sales budgets. An inaccurate sales budget can cause serious problems. If the budget is too optimistic, the business might expand production too much, leaving unsold stock that cost a lot to make. This stock may need to be thrown out or sold at a lower price. On the other hand, if the budget is too conservative, the business might not have enough stock to meet demand. This means lost sales, with customers going to competitors. Over time, customers may even develop loyalty to other brands, leading to long-term damage for the business. In conclusion, the sales and revenue budget is the foundation of financial planning. It shows expected sales, predicts revenue, and guides all other budgets in the organization. By preparing accurate sales budgets, businesses can plan production, resources, and spending with confidence. Thank you for joining this session, and I hope you now understand why the sales and revenue budget is so important for business success.